Welcome back to the Deep Dive. If you're here to get up to speed quickly but also get the full story, you are in exactly the right place.
Definitely.
Today, our mission is to really explore this new financial frontier. We're talking about where traditional finance and the crypto world are starting to merge.
Right.
Specifically, we're diving into these new regulated solutions that are designed to make digital assets, instantly spendable anywhere.
And we have a great stack of sources for this one. Some educational frameworks, a really detailed blueprint of one solution, and just the broader market context.
But before we even get into the tech, we have to set the scene. I mean, the reason this market is just exploding, it isn't just because of crypto, is it?
No, not at all. It's because the current global payment system is, for a lot of people, fundamentally broken.
Okay, that's a bold claim. Broken in what way?
Well, think about it. Right now, we're talking about billions of people who face these huge restrictions on global payments.
Restrictions like what?
Things like incredibly high, opaque fees when you're just sending money home, or processing times that can take days, not seconds, for cross-border transfers.
Not to mention just lack of banking access in huge parts of the world.
Exactly that. Or even things like geopolitical sanctions that can just lock up your funds. Traditional banking relies on this maze of intermediaries.
So the real impact here is that even as crypto adoption is going up and we're seeing millions of people holding these assets, the actual usefulness, the utility, is stuck.
It's completely hampered.
You can't spend it easily. So if I'm, say, a crypto trader or a digital nomad, I still hit this wall every time I just want to buy a coffee.
That's the ultimate last mile problem for digital assets. It's the key pain point. You have this asset that you totally control, but you can't actually use it, not instantly, in the legacy financial world.
And that friction, it's just not acceptable anymore. Not for a generation that expects everything to be instant and digital.
No way.
Okay, let's unpack this. Here's where it gets really interesting. What's the fundamental shift, both in philosophy and in the numbers, that's driving all this?
What we're seeing is a revolution, and it's driven by user demand for two things: speed and, maybe more importantly, autonomy.
And the sources have the numbers to back that up.
Oh yeah, some very compelling numbers. For instance, the growth in cashless transactions is just explosive. We're looking at a compound annual growth rate, a CDGR, of about 15%. Globally.
And 15% CDGR isn't just, normal growth. It signifies a real structural shift away from cash.
It really does.
But the speed component is even more telling. On top of that, instant payments, where money moves in seconds, is expected to hit 22% of all transactions by 2028.
Speed is the new currency.
It is.
And that data lines up perfectly with the sort of ideological shift we saw in one of the articles, the one that basically said stop using your bank.
Right.
The whole argument is this contrast between the old banking model, which is, hierarchical, it's closed on weekends.
It freezes your funds for no reason?
It can, yeah. And it offers you basically zero APY. You compare that to the promise of absolute 247 financial autonomy from these well-regulated digital assets.
So it's about taking control back from the middleman. People are just tired of the high fees, especially for cross-border stuff.
They are.
And they want tools that just bypass all those old pain points, making that instant global payment capability. It's become critical for any new product.
Precisely. The market isn't asking for a slightly better banking app. It's demanding a whole new infrastructure, one that's capable of instant global settlement around the clock, around the globe.
So if that's the problem, let's go from the theory to a specific regulated solution that's trying to bridge this gap.
Let's do it.
We're looking at a model called PintoPay, and their promise is pretty direct. No limits, no borders, your crypto anywhere.
A big promise.
A very big promise. And the first thing that separates a solution like this from, let's say, an unregulated project is that foundation in regulation.
That is non-negotiable. It has to be there for any kind of mainstream adoption. And the sources highlight that PintoPay is regulated, and critically, it's a Visa principal member and a MasterCard member.
Okay, let's pause there, because for anyone listening, principal member might sound like jargon, but it's actually a huge deal for their independence, right?
It's absolutely vital. Being a principal member means they don't have to piggyback off another bank to issue their cards.
So they can issue them directly.
Directly, under their own license. This gives them incredible control over the whole payment experience, fraud monitoring, the transaction flow, everything. It lets them build these instant crypto to fiat rails much more efficiently.
And it also means they have to follow all the rules.
Oh, absolutely. It dictates their adherence to procedures like Know Your Customer or KYC, which is essential for ensuring every transaction is compliant.
Okay, so they've got the regulatory piece handled. Now let's get into the mechanics. How does the tech actually solve that instant conversion barrier, the one that eliminates volatility risk?
Right, this is the clever part of the architecture. When you pay with their card, physical or virtual, the system isn't relying on you having already loaded it with fiat currency. That's how the old crypto cards worked.
And that was slow.
Very slow. Instead, the moment the merchant swipes, a request goes through the Visa or MasterCard rails, but the back end immediately triggers an instant conversion of your digital asset holdings.
So Bitcoin or a stablecoin or whatever you're holding.
Exactly. It converts it right into the local fiat currency the merchant needs.
Which means?
It means the volatility risk just vanishes because the asset is converted and settled at the exact second of purchase.
So you spend crypto, the merchant gets dollars or euros or whatever.
And the time lag that could cause a price swing, the thing that plagued all the earlier crypto payment methods, it's gone.
So the consumer has a seamless experience, and the merchant just sees a totally standard transaction.
A completely standard fiat transaction. That instant conversion tech is the absolute game changer for day-to-day use.
That makes total sense. And the acceptance footprint then just piggybacks on the existing card networks.
That's it. They're talking global access in over 180 countries, acceptance at more than 30 million merchant locations. It just works everywhere, right out of the box.
And of course, it supports all the modern stuff, Apple Pay, Google Pay.
All of it. Virtual cards, physical cards, whatever you need.
What about the user experience itself? We saw some notes on their mobile app, and the community seems pretty confident.
Yeah, the app is designed to be a sort of multifunctional banking interface. It manages everything, regular payments, transfers, budgeting, instant top-ups from your crypto wallets.
So it's trying to be that one central place.
It centralizes your financial life, giving you total control. The source material even pointed out their community confidence of 4.8 out of 5 on Telegram.
Okay, 4.8 is great, but I'm a professional skeptic. What about that missing point 2? What are the typical complaints or feature requests you see?
That's a fair question, because nothing's perfect. Usually that little bit comes down to things like initial onboarding friction, maybe some regional restrictions because of local compliance.
Or people wanting more coins supported?
Always. Users always want support for the more exotic altcoins instantly, but that high score really validates the core experience. The instant conversion engine, it just works reliably.
Okay, let's zoom out a bit. This isn't just a product for, the crypto enthusiast. The source material argues the real scaling potential is on the B2B side.
Absolutely. The use cases are really dual-focused. For B2C, yeah, it's perfect for travelers, traders, digital nomads. But the B2B side is where it gets interesting. They're targeting banks, fintechs, corporate payment solutions.
And if we connect that to the bigger picture, offering this kind of infrastructure to businesses lets them scale way faster than trying to acquire every single user themselves.
Dramatically faster.
So how are they enabling these big partners?
Through a scalable architecture that's built for rapid deployment. They offer 2 main products for partners, an API gateway for deep integration, and then the white label payment card solution.
Okay, explain the white label solution.
Think of it this way. PintoPay provides the sophisticated engine, the chassis, the regulatory compliance, and the instant crypto to fiat fuel line.
And the partner just puts their brand on it.
The partner, say a big crypto exchange, just has to slap their own paint job and logo on the vehicle. They can instantly launch branded, crypto-friendly card services to their millions of users.
Without spending years and millions of dollars building it all from scratch.
Exactly. They skip the regulatory headaches, the Visa and MasterCard membership process, all of it.
That's massive leverage. So how do they monetize this? What are the revenue streams?
They're very clear. First, you've got card fees for issuance and activation. Simple enough. Second, and this is where the scale kicks in, is transaction commission sharing with their B2B partners.
So they take a small slice of every transaction.
A small slice, yes, but they also give a cut back to the partner who brought the user. It creates this really powerful, aligned incentive for everyone.
And the third stream.
Third, they charge upfront white label setup fees for businesses that want to deploy the whole branded system.
Okay, so we've got the infrastructure, we've got the revenue model, but let's talk traction. What's the actual commercial data look like?
It's compelling. The company already has a community of over 100,000 members. They're selling over 1,300 cards a month to individuals. But it's the partner forecasts that show the real velocity.
Let's start with the first example, a wallet finance.
Right. A Wallet Finance partnered with them to launch their own branded MasterCards, and that project is built on their existing user base of over 410,000 trusted users.
And the forecast income.
A massive $27 million. A number like that is a huge validation of the commercial viability of this white label model.
And what about the more niche applications? There was one centered on Telegram.
Yeah, CryptoBank and Telegram. That one's all about instantly issuing cards and enabling global payments right inside the messaging app.
So they're not just targeting traditional fintechs.
Not at all. They're going after these high-growth digital communities. That partnership alone represents over 320,000 users and a projected income of $17.3 million.
That flexibility seems to be key.
It really is. The last big example is CryptoSpace. They're using the solution for instant virtual card issuance, and that partnership forecasts over $30 million in income from 470,000 users.
These aren't just small pilot programs.
No, these are major high-volume partnerships.
Which brings us to the critical part of our job. We have to compare these options fairly. I mean, the solution sounds effective, but it exists in a landscape with some really powerful players. How does it stack up against, say, Wise, PintoPay, or Revolut?
That comparison is crucial, and the sources really help clarify the trade-offs.
Okay.
Take Wise. They are fantastic for fiat-to-fiat cross-border payments. Probably the lowest FX fees if you're just moving traditional money. But they don't handle crypto at all. So if your goal is to hold and spend digital assets, Wise is a non-starter.
Okay, so Wise is a specialist. What about a hybrid model like Revolut?
Revolut is broader. They've integrated crypto, but the structure for spending it can still be a bit clunky. And critically, they do not offer a robust white label solution for other businesses. Their focus is B2C.
And the crypto-native competitors, like Pay.
Pay is much closer. They offer instant crypto conversion. But when you look at the specific competitive matrix in our source material, PintoPay stands out because of the combination of features.
Just instant crypto to fiat.
The white label solution for businesses.
And the huge acceptance from being a principal member.
Right. The choice really hinges on whether you're a business that needs that B2B infrastructure.
I have to inject some skepticism here, though. This whole system, it relies on being a member of Visa and MasterCard, and it requires KYC. Doesn't that sort of betray the whole be-your-own-bank idea by just swapping one centralized choke point for two others?
That is the core paradox of regulated crypto adoption. It's an absolutely essential trade-off.
So you sacrifice some purity for practicality.
Exactly. By submitting to KYC and using the card networks, these solutions give up that pure, permissionless decentralization. But what they get in return is regulated, global utility.
And for most people, utility is what matters.
For the average traveler or business owner, utility trumps ideology every time. They need a system that's legally compliant and accepted by 30 million merchants. And right now, only the legacy networks can provide that scale.
It reinforces our goal here. There's no single best option. It all depends on what a user prioritizes. Anonymity or massive regulated acceptance.
Perfectly put.
Okay, that clarifies the compromises. Now let's look ahead. Given the success they're seeing with these early partnerships, what are the company's growth expectations?
They are aggressive, but they're also grounded in that high market COER we talked about earlier. They're aiming to hit 1.2 million clients by 2028.
And that's not just from selling individual cards.
No, that projection is built on continuing to acquire large partners through their white label solution.
And what does that mean in terms of revenue?
The revenue projection, based on that partner acquisition rate, is a pretty significant $35 million by 2028.
Which suggests they're confident that this demand for instant regulated crypto to fiat spending isn't just some niche trend.
No, they see it as a foundational shift that businesses are desperate to tap into.
So to synthesize all this, we've covered the huge market need for financial autonomy, the massive growth in digital payments, and the specific tech, that instant conversion engine that's bridging the gap through regulation.
I think the final takeaway is that the market is moving fast towards an era of financial autonomy, but it's going to be a structured and compliant one. All those old friction points, high fees, banking restrictions, slow transfers, they're being directly addressed by these new solutions.
Which leaves us with a pretty important question. Given this explosive growth forecast for regulated crypto payment solutions and the very specific problems they solve, How quickly will the legacy banking systems need to integrate these instant crypto to fiat rails just to remain viable in the global payment space? Something for you to mull over or explore on your own.